Bitcoin's breaking 70K again, and I think this might be our last chance to get in. Guys, hello, it's Tom. In case you hadn't noticed, for whatever reason, Bitcoin is breaking 70K again right now. And I think given the news that we've had on the demand side and the supply side, these might be the last few days that we can get into the market at these current prices. There is also a bear case looming, which to be honest, I'm somewhat more excited about, because if you're someone like me who wants to accumulate Bitcoin, that represents a much better chance to do so at a favorable price before an eventual move to the upside, which I think a lot of us believe is coming. I'll go into that in more detail towards the end of the video. For right now, I want to preface this by saying nothing I say should be considered financial advice. This is purely me musing about the markets for entertainment purposes. With that, let's jump into the charts and have a look at what the prices have been doing over the last couple of days. So here we go, 71K Bitcoin. We've just taken out yesterday's high, and we have just taken out the high formed on the 27th of May. The next point of resistance will be 72K. And beyond that, there is only one more point of resistance at 72.7 before the all-time high. So I've got the monthly chart up here, and since the monthly candle for May closed a couple of days ago, we've essentially printed a bullish retest of this range high at about 58.6. So as you can see, broke above 58.6 in March, came back to retest in April, and then closed above for May. Currently, we are well above and on the way to attacking the high for May, in fact, as well. So not a perfect analog, but as you can see, July 2020 broke above the range high at 10,700 or 10,800, retested back in August, September, and then eventually moved to the upside in October. What I've also marked out on this monthly chart is dates of former halvings, right? So former halving back in July 2016, and then I've also got the May 2020 halving marked out on here, as well as, of course, April 2024. What I want to draw your attention to here is the fact that after each of these halving dates, we had essentially a couple of months to the downside before an eventual move up, right? So halving in July 2016, moved down August 2016, up month for September 2016, and then in October 2016, we broke above the high for the halving month and then eventually moved away to the upside in a big way. 2020, similar story. So halving in May 2020, moved to the downside June 2020, and then by July 2020, we'd begun this move to the upside. By that schedule, we're essentially right on time for where price is right now, given that we had the halving back in April. So taking a look at DXY, you can see we've broken this uptrend that we've been in essentially since the end of last year, forming a new low yesterday. Today, price came up a little bit to retest and has pretty much just been smashed back down again. Generally speaking, if we see DXY break to the downside, we see moves to the upside in risk assets like Bitcoin and stocks as well, generally speaking. So to zoom in on Bitcoin, I've got the daily chart open here, and essentially for the last few months, what we've seen is range-bound trading between the all-time high and the bottom of the range at around 61K. What's happened over the last couple of weeks is a definite change in sentiment towards the upside of that range. So if you look back for most of March and April, we spent a lot of time towards that 61K level at the bottom of this range, eventually breaking through there at the beginning of May. It was quickly reclaimed, and what's happened now over the last couple of weeks is essentially a reclaim of the top half of that range from this pivot point here at about 67K. That also marks the former point of resistance back from the 23rd of April. So that is resistance turned to support now. And as you can see on the daily, I mean, we just haven't closed below that 67K level once on the daily in the last 2-3 weeks. So if we draw in a volume profile for this range, depending on exactly where you mark that out from, I've gone from low to high. You could also go from high to low. Either way, you get confluence between this 67K level at the middle of the range and the point of control. Again, it's just another reason why this level is really the one to watch to the downside, but more on that towards the end of the video. To the upside, of course, right now, just brushed 71K. Interestingly enough, over the last few highs, we've respected this trend line across the tops quite well. Yesterday rejecting that. Today we've just reclaimed it, so it'll be super interesting to see if we get a bullish retest off the top of that, since that has been pretty well respected up until now. The next point to the upside will be the high from May at 72K, and beyond that we've got 72.7 before the all-time high. So it's super important to remember that price doesn't actually move because of lines that I've drawn on a chart or lines that anyone else has drawn on a chart, right? Price moves because of the fundamental forces of supply and demand. And anytime we're conducting technical analysis, what we're doing is we're looking for patterns that occurred in the past that we might expect to play out again in the future. What's actually moving markets is fundamentals and it's news. And we have got some fundamentals and we have got some news in the last couple of days. So let's jump in and have a look at that. So on the demand side, as you might imagine, the heart of this news revolves around the ETF space, and in particular, BlackRock's role in the ETF space. So the first thing I want to draw your attention to is the fact that BlackRock's iShares Spot Bitcoin ETF is now the largest Bitcoin ETF on the market. So just yesterday, they surpassed Grayscale Bitcoin Trust, reaching an AUM of $20 billion. Bitcoin ETFs actually made up 26% of BlackRock's total 2024 inflows so far, and 56%, more than half, of Fidelity's. Now, BlackRock themselves have actually been allocating iShares Bitcoin ETF to two of their own funds, namely their Strategic Income Opportunities Fund and their Strategic Global Bond Fund, which added $3.56 million yesterday and about $500,000 yesterday, respectively. Now, this is massively bullish. I mean, it basically means that BlackRock is so bullish on Bitcoin and so bullish on their own Bitcoin ETF, they're willing to allocate funds from two of their own funds into that ETF. On top of that, and as a bonus, Australia's first spot Bitcoin ETF began trading earlier today. So what this news indicates is essentially the growing institutional appetite and institutional demand for Bitcoin and Bitcoin-related products. Let's take a look at the supply side. Something that we've also noticed from past cycles is that when Bitcoin moves off exchanges in high volumes, price tends to go up because this is indicative of whales moving their Bitcoin from the exchange into cold storage. So take a look at this story. Colossal $2.53 billion Bitcoin withdrawal stuns major exchanges. This is in reference to around 37,000 Bitcoins being moved off exchange, including Kraken, which is one of the bigger OTC desks as well. So combine that to the reaction from halvings that we've seen over past cycles and the increased demand and increased institutional demand that we just discussed, and that is a very, very bullish recipe for Bitcoin. Now, I did mention at the start of the video that I had a bear case, and I did mention that the bear case was actually my favorite case because I want to accumulate more Bitcoin before the market inevitably goes up. So this is the Bitcoin exchange liquidation map by CoinGlass, and if you take a look at our 67,000 level here, you can see $1.7 billion worth of long liquidations looming. If the price was to fall just a little bit further to $65,500, that becomes over $2 billion worth of liquidations. So what that essentially means is that there's a great deal of leverage long positions in the market, and if price was to move down to that $67,000 support level and below that level, those leverage long positions would be liquidated, i.e. forced to leave the market, and the resultant move would likely be quite dramatic to the downside. Now, where we are right now at 71K with the supply and demand fundamentals that we discussed earlier, it does look likely the price is going to move to the upside. I think whichever way it goes from here is likely to be a dramatic move. Really, I hope price comes down a little bit so we can accumulate some more before the eventual move to the upside. In any case, thank you so much for listening. I hope that was useful or at the very least entertaining. Plenty more to come. Catch you in the next one. Cheers.